Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. I was close to titling last week's episode as Blood in the Streets. I'm glad that I didn't, because I think this should be the title for today's episode. How are you doing out there, Mark?
I'll give you the whole story, but it is Blood in the Streets. And in fact, I'm a outfit repeater. So I've got the, Lord Rothschild red pants on, but I have the whale sock game. So the Bitcoin whale. And why do I have the Bitcoin whale? We'll talk about this. There's certainly a ton of blood in the streets. And, Lord Rothschild said, you're supposed to buy when there's blood in the streets, even if the blood is your own. And I'm feeling a little bit of that lately. It 20%. Right. Since we were together a week ago, Bitcoin dropped 20%. Now it's recovered a little bit of that in the last couple hours, but the bigger problem is kind of what's going on broadly. I mean, if you watch the metals markets, it's the most extraordinary thing really ever seen. Silver in particular. So there's something going on. I mean, the speed at which, but the whales, why the whales? So despite a 30% drop in about 3 days, you've seen the whale buying activity spike dramatically. In fact, to the highest level we've ever seen. And so normally, if you think about the bear market, so we had the big bear market in 2018, we dropped 84%. And then we had another big bear market in 2022 that, market dropped 74%. So now here we are 4 years later in 2026. And, as we talked about on the show, nobody really loved the fact that we were saying we were in crypto winter. And it's not like I'm not celebrating quote unquote being right. It's not about right or wrong. It's about trying to identify trends. But the duration is shrinking. So things are happening faster. And part of that is there are more quote unquote whales than there used to be, right? Big institutions have come in like BlackRock and others. So the panic that happens from retail. So look, human beings do two things really, really well. We've talked about this. We buy what we wish we would have bought. Mm-hmm. There were people lining up outside in freezing cold to buy gold and silver, a week ago when it was literally peaking, $5,000 gold and $125 silver, and bang, it drops. And then humans do another thing. We sell what we're about to need. So people were puking Bitcoin, but it took a long time in 18, almost 11 months. And then it took a little less time, about 9 months in 2022. And now here in 2026, October to February, that's about 6 months. So I'm not declaring that the bottom's in, but we might be there. But that also doesn't mean we're going to have a V-shaped bottom like people got used to in the stock market. I think we're going to bounce around for a while, but I think the bulk of the bloodletting is over.
Yeah, I hope that that's the case, Mark, because I remember on the last show, we were talking about, where the market sat. And there were even some conversations we had on our show, is winter and the cyclicality a thing of the past with the big institutions? And I think, we were not saying it was, we were simply exploring that conversation and saying, it's really hard to kind of unwind that because it's, at this point, part of almost the code and the way that operators work. And we've seen what's going on with miners, I'm sure we'll talk about. But, we saw that Bitcoin rebounded sharply after that 65K went towards 60, and then that forced 700 million in liquidations across the markets, right? So that really shows a lot of things that we're talking about and how leverage continues to drive all this volatility rather than this long-term conviction. Because if you kind of look at, these big incumbents you mentioned, they're more whales now. Their behavior mimics much more of kind of this textile investor. We've seen sell-offs across SaaS and into BTC. So we're at the lowest and the steepest one-day drop 13% since November of 22. And, fortunately, Asia came to the rescue when, things started happening on the other side of the world. And then kind of there was this people that stepped up, and at that 60K level, we were able to rise a touch more, but not before Sailor, unfortunately, got the brunt of this with a $12.4 billion quarterly loss tied to BTC. Yeah. Now, Mark, I'm sure, we love, probably one of the things that we like a lot, we have a lot in common, but we love history. We also love business history. And so obviously the Big Short is must watch. So Blurry, he had this prediction, right? Where it said, well, if strategy goes down, and the number was not that low as far as where they would be underwater, not saying just because they're flirting with that number that they will all of a sudden be underwater. These things take time. But he was sort of looking at, if Bitcoin kind of goes into the 50s, there's a scenario where strategy goes under and creates this drag along effect, and we can kind of go under and under. Now, he obviously had a big call with subprime mortgage crisis. But what say you, Mark? Obviously now you're thinking that we have kind of...
Michael Burry is a smart guy, right? He is a smart man. And he certainly, nailed the Big Short in the mortgage market. But there are a couple of things about his recent rant that are they're not very intelligent. And I shouldn't say that because, again, he's way smarter than me, just pure intellect. But the one that's most disconcerting is he clearly just doesn't understand how Bitcoin mining actually works. Like, he made this claim that, if Bitcoin were to hit, 50 some odd thousand, then all the miners are out of business, because the cost of electricity is 56,000. I'm like, well, okay, but that's not how it works. There's a couple of things. There's a thing called difficulty adjustment. We either are just having or are just about to have the largest difficulty adjustment downward ever at minus 13%. So that ensures that some number don't go out of business. The second thing is, it's not an immediate thing, right? If you own a bunch of machines and they're paid for and you're depreciating them, then you don't have anyone that can confiscate your stuff, even if you have to sell at a loss for a little while and you've got credit lines. But now if you levered up your machines, then we have a problem. But that's true of any business, right? If you're a business financed with equity, you can suffer long periods of losses, operating losses. Look, Amazon did it for how many years? Like we lose money on every transaction. We make it up on volume. Ha ha ha. And anyway, so that his comment about mining, just don't listen to it. He's just either he hasn't spent the time, which is probably the likely answer, because he's certainly smart enough to figure this out, but he just doesn't understand how mining, and most people don't. I mean, I don't understand how you create a nonce exactly, like the actual cryptographic security part, but I don't need to know. I understand what the concept of a nonce is, and you have to match the number to open the key. But long story short, I think that was a throwaway FUD kind of fear, uncertainty, and doubt. His comment about MicroStrategy, again, he's smarter than this. So I'm hopeful that this is the media misinterpreting his words, right? Because Michael knows how debt works. There are different kinds of debt. There's secured debt, there's unsecured debt, there's senior debt, there's junior debt, there's callable debt, there's debt that has to be refinanced. And this whole nonsense that, as soon as the price of Bitcoin is below the average purchase price of Strategy's stack, that he's going to get a margin call.
Yeah.
He doesn't have any margin debt. Lots of people are getting margin calls. Look at what happened to Amazon last night, right? It was down 15% intra, from close to open, and then bounced 15% bounced 20% back to get even. And
Wow.
So that's because people in their brokerage accounts, if you get a margin call, you have to, fulfill it or they seize your assets. Michael doesn't have any debt like that. He has not pledged his Bitcoin against the debt. Now, there are plenty of digital asset treasury companies that have. And so they have been getting punished. So if you're a digital asset treasury company with no debt, you're just going to keep buying and buying and buying. And, Simon at Metaplanet talked about that last night, that they really don't have very much debt at all. And they're just continue to buy. Same with Saylor. He doesn't have debt that is at risk of being seized. Now, he has debt that he does owe people. And if they suddenly came and said, well, I'd like to be paid back, the funny thing is he can just say later. And it's not until 27 and 28 when he has anything due. And those are small numbers relative to his total value. So if you have $40 billion of value and you owe someone $1 billion, owing someone $1 billion is a lot. I had that once in my career. I owed a bank $1.4 billion, not me personally, but the company. Wow. And it was during the global financial crisis. And they said, we'd like our money back. I'm like, but we don't have it. I mean, it's in all these hedge funds, and well, they're like, go get it. So that's a scary, $1 billion is a scary number. But if you have 40 billion of assets, I mean, we were lucky. We had 5 billion of assets and we owed $1.4 billion, so it was easy to get. But he has 40 billion of assets and he might owe 1 or 2 billion. The rest is due later. It's non-callable. And the best thing is it's a general obligation against his business, which could be the software business. But anyway, so it's FUD, fear, uncertainty, and doubt, is rampant right now. I mean, Jeffrey Epstein is Satoshi. I mean, the nonsense that's being spewed is mind-boggling. And yet it's this way every single time. Now, some will argue that, well, maybe it's being created by the people who are short. Probably true, actually, right? So if Michael's short these assets, could he possibly be saying negative things to push the price down? Possible. Again, not accusing anybody of anything, but certainly you could make that case. Like, look what's happening in the software stocks. Like, Bitcoin was down 48, I think 51% at the peak, 51% right. Peak to trough, 51%. There are hundreds of software companies down more than that, right? Because, AI is going to replace. Now, one of my favorite the other day was, so you're telling me that corporate America is going to ditch Salesforce CRM to replace it with something vibe coded by a 13-year-old. Yeah, that's probably going to happen, right? But yet the FUD, the fear, uncertainty, and doubt, is they're selling CRM every single day, and ServiceNow and all these software companies. But I mean, yes, you can ask Claude to make you a piece of software that can in theory, do some of the stuff, but can it scale into your business? Is it gonna fully be debugged? Is it actually work on a platform that you can get into a lot of seats? I mean, there's so many things that just don't make any sense. But I digress. But one thing I forgot to mention about the reveal. So I told you, right, that I was going to wear the Seahawk green, which I have on.
That's right.
So I got the blue and the green. So we don't match today because I am all in on the Hawks this weekend. So, we'll see what happens.
Well, yes, we'll see. We'll see in the big game. And I think, to the idea of betting, Mark, there is almost as much activity in the markets at the 100K level as there is at the 70K level. So basically, predicting that, we've got kind of an upper and a lower bound here. But Mark, I recently celebrated my 40th birthday, and I did the unthinkable, which was I entertained an argument amongst family, amongst the Bitcoin non-believers. So as the price was going down, I just got fed up with it, Mark. I think you could relate to this as well, where, the idea of, well, Bitcoin can't do anything. It's all a scam, and this is inevitable. It's going all the way to zero. And so, I unfortunately got pulled into this argument and went way too far. And then eventually you get the tap, which you probably get all the time, from your spouse, like, okay, just. But I was like a dog with a bone. So I think, when we kind of look at it zooming out, as far as, what's been happening and maybe why, what's triggering the most recent dip, I think that's probably why there is some of this thinking that this is a touch irregular as to why this is all happening across markets, because nobody can really agree on one single factor, but more of a contribution to different things. So you've got the precious metals that you've spoken about. You've got this sort of a partial government shutdown now. We've seen that before. The newly announced Fed Reserve Chair, rising geopolitical tensions. Mark, there's really nothing new here other than the fact that markets always seem to get cold in January and Feb, and then they come back in the spring.
Now, look, nothing new in this world. And remember, volatility is simply disagreement about the future state of anything, right? So, there's a wide range of people who think the Patriots are going to win versus the Seahawks, right? So there is volatility around the betting spreads because there are people who think, oh my God, it's so clear that New England's going to win. There are others that say Seahawks are going to win. So you said it. There are people, at your birthday party and people online, right, that think Bitcoin is going to zero. Now, it's the same people who've said that now for 17 years. Okay. So 17 years is a long time. And there's actually a website, rest in peace Bitcoin or something like that. Bitcoinisdead.com. That's it. Bitcoinisdead.com. As of yesterday, Bitcoin's been declared dead by a major media source 461 times. 11 more times this week. So 461 times. And I know 11 times in the past week because I did a presentation of my 10 surprises a week ago yesterday. And I had the, bitcoinisdead.com picture, and it was 450. And now it's 461 as of last night. So it died 11 more times. And yet there were people tweeting that, and actually on CNBC saying that by 2029, the price could be as high in their upside case of 2.5 million, and their base case was 1.3 million. So that is a spread that you could literally drive a fleet of imaginary Tesla semi trucks. I'm just, we're supposed to have the semi by now. We just don't have it, but, and probably never will. That's just too heavy you just need too many batteries to make a semi go. But, the issue there is if we buy a 90-day treasury, 91-day treasury, there's zero volatility because in 91 days, there's no disagreement that 99.99999% of the time you're going to get paid. So there's just no volatility. Now, if you buy a 30-year treasury, that has pretty good volatility. If you look at gold in the last couple months, the volatility is off the charts, and silver even more off the charts.
Yeah.
And think about this. Silver went from $40 to $125 in about 90 days. And then it went from 125 to 75 in about 3 days. This is a $5 trillion, well, it was a $2 trillion, then it was a $5 trillion, now it's a $3.5 trillion asset. That shouldn't happen, right? There shouldn't be that much disagreement about the value of a metal that we've been using for, I don't know, 6, 7, 8,000 years. But actually probably longer than that, as long as humans have been around. They've been making silver stuff. So I struggle with this. Like, why is it surprising to people that there's volatility around any asset? I mean, again, Amazon, 29 years, public company, every year, a double-digit drawdown. It had a double-digit drawdown last night, 15%. On average, 31%. Last year was exactly 31%, 31.5%. That's hilarious. But when was the right time to sell? Never. And so just because there's disagreement doesn't mean that something's going away, because most times it's human behavior is to resist change. We're guilty, and the older you get, the worse it gets, right? And that's because we're comfortable. We're used to doing it a certain way. I mean, I like my coffee a certain way. Well, why don't you try something else? Well, I kind of like the coffee the way I like it. So, but maybe I should try something new. Anyway.
Yeah. Well, I think, a couple things before we close out on BTC is that, there are a lot of opinions. But one that kind of seems to have some credibility here is this idea that, with like near-term risks remain skewing to the downside. There are some belief that we're approaching the final innings of this bear market, right? And so the expectations that we can kind of reverse course between, in the 60s, basically you're bottoming out, as you mentioned, Mark, around the last cycle highs, around, 60K. So the reasons for optimism, this is where we make people believe again, right? Is you turn on the rally cap and put it inside out. We've all played Little League, right?
Yep.
So
yep.
You can have the idea that basically they're, in the October 10th crash, you still had lingering geopolitical tensions. Okay, we've seen that. We also have seen strong GDP growth. You've seen 2 potential U.S. interest rate cuts in 26, and potentially stabilizing inflation could kind of help what's going on with crypto. And obviously you still have relatively high market sentiment amongst some of the older crypto holders, which tend to be the biggest movers in the market, right? Yep. And of course, I thought it was pretty crazy, Mark. Last thing I'll say is that on Monday, you started seeing a reverse course where you started seeing, net inflows into the ETF, although the ETF holders on average now are a little bit below where they entered in, as most people entered in the 80s, and we're some degree below that. So when you're at that level, folks can hold to kind of see if we make it out. But, one company that we have in the portfolio, Mark, that could actually be pretty telling about what's to come is Ledger, right? So Ledger is one of our portcos out in Paris, and they are the market leader by far of hardware crypto wallets. So we've been seeing companies test the market. We spoke all last week about what the IPO landscape looked like in 25. Some companies that did well, like Figure, some others that struggled in post-IPO state. So, they were valued at $1.5 billion, the last report in 23 in the funding round. And, they're looking at New York Stock Exchange at a 4 billion mark. And they look at folks like Bitco and their recent IPO that can signal this growing appetite for, the fundamentals. We spoke about this: profitability, infrastructure. And, regardless, Mark, of where crypto goes, people still need these kinds of devices because
no, 100%. And so, all right, so let's do this. So let's channel Satoshi, right? So we'll do the Satoshi hoodie, and so we'll channel Satoshi. But the point here is, remember the 4 types of participants in a market. Okay, there are investors, us and others. Anyone listening to this show, you're an investor, right? You buy things below fair value. The fair value of Bitcoin today is around 80,000. So there's investors, and man, that's pretty good fabric because I could barely hear. So the second thing is there are traders, and traders don't care about fair value. They just want movement. Well, we got plenty of movement. So you could be short, you could be long. If you short the last few weeks, God love you. So then you've got the hedgers. The hedgers, right? The people who are producing, the Bitcoin miners, they're not going to sell their Bitcoin, right, at 65 if it costs them 77 to make it, because the cost of electricity is 58, but then there's the cost of operations. So they're just going to hold for a while. So there's not going to be as much hedging, not going to be as much selling pressure from them. So the speculators aren't going to have anything to do for a while. So you need the price to get back toward fair value and a little bit above fair value in order for the speculators to have something to do. The last one is the gamblers. The gamblers are being flushed, right? The gamblers that came in at the top, who levered up, who thought we're going to the moon, up only. Most of them have been flushed. In fact, I saw a stat, and I don't know, I didn't verify it, but I saw it, that the short long ratio of positions in the futures market were 140 to 1.
Jeez.
That all the longs, the levered longs, because the perps market, right, and the futures market, right, you don't put $100 down to buy $100. You put $20 down, or $10 down, or $5 down, or God forbid, $2 down, and get 50 to 1 leverage. $140 short for every dollar long. I would argue that means most of the ability to squeeze those people out is gone. So now we're going to be dominated by investors, and that's a good thing. It doesn't mean we're going up only, because investors are relatively rare. There just aren't that many. There's lots of traders, a handful of speculators. Problem is there's tons of gamblers.
Yeah.
So that's where we are. Spend time gambling on the Seahawks this weekend. Don't gamble on Bitcoin.
That's right. Don't gamble on Bitcoin, and instead look at the infrastructure. Where we talk about the S-curve all the time, that price is just a moment in time relative to what people's future expectation might be of assets that have nothing to do with what they're trading. They just gotta get in and out of positions. Like, Mark, I love this. I will kind of admit I'm a bit of a Microsoft fan. I think that it's been a company that's been around for a while, and right now they're not at a 2-year low, Mark. They're at a 2-year discount, and because they're thought of as a SaaS company and not as an AI company. And pretty sure the chart of the week last week showed that they've come out with a cutting edge chip that is really kind of the counter to the Google strategy, which Google has been, or Alphabet has been, a real big beneficiary, as they're thought of as this AI company now, whereas Microsoft is more of the high frequency, not the fastest performing chip, as we saw with the teraflops, and really as we say, the 2-year discount really holds. But I think that the big news that we also needed to talk about in the kind of the AI space was the consolidation, Mark, by SpaceX the acquisition,
Yeah.
the putting the dollar in your right pocket into the left pocket, where XAI was acquired for a deal that valued them at $250 billion, and SpaceX at $1 trillion, which consolidates part of the Musk empire. If you're playing Risk, the key is always to start with Australia first. It's easy to control, and then you expand out the board. Feels like that's what Elon's doing here. And I understand it, Mark, but I also don't understand it. I'm curious about your thoughts when we look at something like this.
Look, I mean, so what Elon did with XAI is extraordinary, right? I mean, Jensen Huang even said, he said, you know, the ability to even like take delivery of the number of chips that he took delivery of is hard, like just physically, logistically hard. Some might argue that, you know, the U.S. military would have had to help, right? And maybe it did. I don't know. So the second is to set them up. Just the physical human, because these are not robots, right? He's not using his you know, humanoid robots to do this. This is human beings plugging Ethernet cables and you know, screwing in racks. That was extraordinary. And so not many people could mobilize that number of technical resources. And it's, you know, not setting up tents to you know, but you know, bolt together Teslas. So that was reasonably impressive. So that asset is real, right? I mean, the boom in AI so far has been the construction of these data centers. And now, my personal opinion, it doesn't end well because the data centers are inefficient, meaning they're trying to brute force something, and you got to spend $3 to make $1 of revenue. So I don't really think that XAI is worth $200+ billion. I don't. I think it's a valuable asset. But then if it's not worth 200 billion, well, how do you acquire? Well, you just jack up the value of the acquirer. And you know, look, we saw this with you know, it hadn't worked out very well, but with Strive and their acquisition of Semler, right? So they're buying, we're going to buy this asset. It's just Bitcoin, so we know what it's worth. Well, yeah, you knew what it was worth, and then the price went down. But we're going to buy Semler, and we're just going to, and we're going to pay this big premium so they can say they got a big premium. Well, then we'll just jack up the valuation of Strive. And investors were like, that's a dumb number. Now, with SpaceX, you can't fix it because it's private. So, you know, there can be a small transaction somewhere at some number lower than $1 trillion. And my guess is anyone trading SpaceX today is trading it way less than $1 trillion, be my guess. I mean, we can validate that. But in the public markets, people could say hell to the no. So if you look at ASST, the stock price has just been going down. And so it's funny accounting and it's funny math and it's a great hype story. But
so do you buy that unification story then, Mark, of this idea that now you've got the SpaceX rockets, satellites, the Starlink infrastructure with the chatbot on Grok, and then you can, you know, strengthen the data center.
Look,
and then of course it's all about defense, like you mentioned.
I've actually been talking to, I mean, when I say kid, I mean it in a loving sense. I mean, he's not a child, but he's a kid to me. He's sub 30 years old. And I've been talking to him for a couple of years. Like before this was a thing, he had an idea to create data centers in space. He's like, you know, how could we do this? And because if you think about data centers, their biggest cost is energy, electricity.
Yeah.
So he's like, look, if we're up in space, that sun radiation is super high. And if we put solar panels and then we beam the data down, you know, through satellite links, like absolutely. Now, him doing it as a startup, that's what we do. We invest in startups. And so that's interesting, but it's a heavy lift. if you've already got a company that's putting satellites in space and there's a mesh already, now you got to put different satellites and they got to have big solar arrays, and then they got to have the ability to, beam the stuff back. But I buy it. What I don't buy is the engineering challenges of making a data center work in zero gravity, in temperatures that we can't really comprehend in terms of cold. And I'm like, oh, but that's good because it generates heat. I'm like, well, yeah, but if it freezes, it's gonna be kind of tough to do it. So I think it's a ways out, but I do buy it. But my own personal opinion is we're trying to solve the wrong problem. We're trying to make this brute force thing that's not the way the brain, remember the brain, 20 watts. And the brain's way smarter than any system we've created. We're nowhere close to AGI. I mean, just not close. And we're 20 watts. And so I think we need to be engineering more around, well, how do we not spend so much energy, not spend $3 to get $1 of revenue, not have to tag the API, a gazillion times to produce a cat pick. And the quality of the AI is getting better and better. In fact, almost indecipherable in some cases. So that's a long answer to say, I think it's more likely that a SpaceX XAI collaboration succeeds than, unfortunately, this guy that would love to do it.
And we thought, Mark, that the 50 billion valuation was too high. And then Elon said, no, we'll prove you wrong. In less than 2 years, in less than 18 months, we will 5 times that. But we'll go the other end. We'll kind of continue the theme of acquisition, but we'll go analog. A company that I know you love, Mark, Texas Instruments.
Absolutely.
Okay, so we're going to go analog. They made a pretty big and interesting move, acquiring Silicon Labs, which is this fabulous semiconductor company, for $7.5 billion or $231 a share. And this is going to kind of bring together a couple of the systems. At least that's the intention here. Combine what Silicon Labs is doing on their kind of wireless and mixed signal tech portfolio, along with this analog play that TI is known for on the processing platforms and manufacturing side. And that'll give TI a huge boost, as much as 1,200 wireless products. And then they're trying to then reshore the Silicon Lab manufacturing in the US, which will, help us out domestically here in the Stars and Stripes. And that could generate a ton of cash, as much as $450 million if things goes well. When you look at something like this, it's funny how some of these companies, I love the quote, as much as things change, as much as they seem to stay the same. TI is back, baby.
I mean, look, I love Texas Instruments, because 2 of my college classmates went to work there right out of school and did super, super well. One was a sales guy. The other was more of an engineer. The cool part of the story is the second guy, the engineer, we were in electrical engineering together. I dropped out. He stuck with it. But now he runs this company, Niobium, that we invest in, and building something really, really cool in fully homomorphic encryption. But I love when the old school companies just keep doing what they're doing, but then take advantage of new trends, reinvent themselves. I mean, look at Dell, right? People left Dell for dead when it sold, and then they acquired EMC, and people are like, oh, no one needs memory anymore. Ha, really? Okay. So it's been a pretty amazing story. And Texas Instruments kind of seeing the ability of their core business, which, for every chip that gets all the glory, so to speak, there's probably 200, I'm making that number up, but it's probably not off by much, chips that you don't see that are kind of, cheap to make and not very sexy, and you don't have high margins, but man, the volume is huge. I mean, think about it in a car, there are all these big chips that they're in every system. And yeah, the super microchip that's powering your screen, okay, fine. But there's all these other things like blinkers. And so Texas Instruments has dominated a number of spaces that most people just don't care about. And now they're seeing an opportunity to deploy some of that capital, and it's gonna well, it has been good for their stock price. The other one, remember the movie Dirty Dancing, when the dad says, when I'm wrong, I say I'm wrong, and so I have to do that. Right? When I'm wrong, I say I'm wrong. So when Cisco was the most valuable or most overpriced company in the world in 2000, I said all the time it was trading at $70, and I said it was going to $5, and on top of that I said it's going to go to $5 from 70, and it's never ever going to get back to 70. So one of my guys bought me one share and mounted it, and so it hangs in my office. And he put a little plaque on it. Now he said going to zero, and I actually didn't say zero. I did say $5, but it says going to zero. And so I had to, admit I was wrong. Cisco just passed their previous 2000 high. Now it took 26 years, but they did it by reinventing themselves, right? I mean, networking and systems and routers. I mean, it's still a decent business, and they sell a lot of Linksys routers, but they reinvented themselves and did new things because, they had a business to build on top of. And I admire that a lot. So whether it's Texas Instruments, whether it's Cisco, it doesn't always have to be the bright, shiny new startup.
Mm-hmm. Well done and well said. Is that with TI, who would have thought that the strongest and most powerful allowed calculator on standardized tests, the classic TI 89. Oh man, that got me through some tough times in high school. It was all the subjects, Mark. It was math, it was physics, it was statistics. Oh man, I used that even in grad school. Was able to leverage that. But yeah, we love that because this is an idea of a smart integration. Who knows how this is going to turn out, but at least the reasons for doing this on paper make a ton of sense. So, I think we got to that point of the show where if the picture is worth 1,000 words, a chart is worth 1,000,000 words or more, right? And I think probably some of the concerns about pricing on BTC are probably best expressed graphically. So we should probably look at some of these markets on the BTC side. So we will go back to go forward, Mark, some of our favorite phrases here on the show, and I will share my screen and I will get your thoughts on some of this price action, because I have been hearing, and I'm sure you have been hearing as well, all sorts of crazy proclamations. But what does the data say when we kind of look at some of this in a more active market, and especially as you zoom out, as some of these charts are doing. So I will share my screen and we will go and see your commentary momentarily here. Okay. So I think this is a pretty interesting cut, Mark, because on one side we have the
Bitcoin price on one axis, and then on the other side we have the US dollar. And so we're kind of monitoring this over a course of time. And Mark, let me know if this is legible to you and not a chart crime. Okay, awesome. So we are kind of highlighting out a couple of periods, and for those that are on audio only, jump over on YouTube. We're so close to the 1,000 subscriber mark, where we literally just decided, hey, we already have the video. We should just let folks see our wonderful dispositions on the Saturday afternoon. So we can get us to 1,000 subscribers, that'd be awesome. We're doing good on the streaming audio only podcast as well. But what we're seeing here, Mark, is this trend upwards over time, certainly relative to the dollar. But I think one of the reasons I put this up for you, Mark, and to get your thoughts is because we saw this bounce that happened on the 60s, where we kind of bounced back up and didn't go all the way back down. And there's some degree of projection here. So take that for what it's worth. But this was kind of part of the Sinister Saturday crowd where folks thought that maybe we can go all the way down to 32K.
Yep.
Which when you look at data, Mark, you can make data say whatever you want.
If you torture the data long enough, it will confess.
Bingo. So take it away, Mark. When you see something like this, and I guess more broadly, when you kind of see the market in general, the thoughts that come to mind, obviously, when we think about the bounce, when we think about what's happening with the dollar, and we look at some of these trends over time, we see in some cases this like reverse correlation, right? When we see this 2018 mark here and some of these other peaks, another one here. Some of your thoughts as you kind of analyze, two, in this case, pretty volatile assets, the dollar and Bitcoin.
Yeah, look, I mean, couple things are clear. I'm not a statistician, but I play one on TV, so to speak. Or I slept at a Holiday Inn last night. The black line and the yellow line are highly correlated, right? I can't give you the number. Is it 94? Is it 95? Is it 82? They're highly correlated, and you do see deviations,
right?
But then like gravity, right? When you deviate from the fair value of anything or the normalized correlation, you're eventually going to get pulled back to par, shall we say. And you see that, right? It goes up above and then it drops back down and touches and then bounces. So it's almost like, bouncing off a resistance level. And there's no upper resistance channel on this chart. So we could create that. We could create a 1 or 2 standard deviation and you'd have a channel that it just kind of rocks. It's a snake in the tunnel. And so, but that pull back to par is normal. But what you don't see are very many instances where it drops dramatically below. But in the instances where you do, in the past, what we have learned, and Bitcoin has evolved, right? It's a teenager today, but when it was a toddler, it was rife with manipulation. All kinds of stories about, early people manipulating the price. You had the Mt. Gox. And look, there was a time in the first cycle, before 2013, where the price fell 93% in a day. Let's sink in for a second. 93%. Now, later it was found that was total manipulation. People got short, they pushed it down, there were no bids, and there was no liquidity, 93%. So you look at that far left drawdown from the 2017 cycle. And in 2018, we had dropped from 20,000 down to 10,000. And I remember like it was yesterday. So I'm sitting talking with my partners and they're like, can't go down anymore. I'm like, well, why? And they're like, well, it just can't, it's already gone down 50%. And you can see the drop, right? I mean, it fell another 50%, which took it down 84% peak to trough. And it happened instantaneously. I mean, it wasn't like in days, but it wasn't in minutes, but it was in days. And then, we started the epic rally back. And I tell the story all the time. I mean, I happened to be on CNBC on December 6th, the day that it hit the absolute low, like 32, whatever it was, 32,440, something like that. And it had just been 6,000 and they were ribbing me about, it could never go back up and it's going to zero. I said, well, Yeah, maybe, but we actually feel the opposite. In fact, we just issued, and I've told the story before that I literally called Warren Buffett and I challenged him to a bet. He would take the S&P, we would take Bitcoin. He politely declined. Someone told him that would be a bad idea, but um, we issued the challenge, and no one would take us up on it. And it's a good thing for them because we would have won in spades. Then you fast forward to the next one. So we got the double top at 67 and 69K in 21. And then we drop, and you can see in the yellow box that there's this big drop. Well, yes, that was when Terra came, or Luna came to Terra, and then FTX, and it turned out Sam was a bad guy and he stole a bunch of money, and people basically lost faith. And again, I remember being in Austin, Texas, at a big Bitcoin event and talking with a bunch of people, and people were like, it just hit like 18K, and people said, well, can't go any lower. Like, well, no, it can definitely go lower. And then the final thing, so I was in October, and then the final nail about, yes, Sam really did steal like a bunch of money and gave it to political candidates. And we went all the way down to 15.5, like almost instantaneously. And so people are on this chart, what they're doing is they're taking those arrows and they're saying, well, in the current cycle, if we repeat that, like, well, okay, but we're not going to repeat it because the market's different and it's more mature. And the first cycle, we went down 93. The second cycle, we went down 84. The third cycle, we went down 77. And we've talked about this since October, that 126 relative to fair value of the time of 90 was just not a big, deviation. And you can even see it visually, right? It's not as high above the yellow line as the previous peaks in 17 and 21. And so it's unlikely that we have to fall as far below. And so, I love, lots of people love to draw lines on charts, but
Exactly.
This last week, that the guy I respect the most as a guy who spent 50 plus years drawing lines on charts, Peter Brandt, he said that somewhere between the high 40s and 63 was about as bad as it could get. And 63 was really the most likely trough. And then you've got the further support of the 58K of electricity. So look, anything's possible. But I think the logic of saying the arrow has to be the same size is misguided, at least for me.
Yeah, that's a good point, Mark. And I think, I should have given you the context that kind of yellow box is trying to equate to this type of metric that FX Empire has come up with which they call the exponential moving average, a 50-week exponential moving average that they quoted 2018, 2020, and 2022, that basically every time you kind of come in that range, as you've noted, you get a retread of 50% or higher. And so by that math, where you're at now might bring you into the 30s. However, you're not really accounting for just how oversold a relative strength index might be. So your low might not be as severe. So we'll probably close, Mark, because we love doing multiple charts, on something that makes the folks a little bit more optimistic. So this was one that you were talking about before, about, one of the holders doing the accumulation patterns. What this chart is showing, Mark, is that people are starting to buy the dip. And usually what that may mean is stopping the bleeding, right? Because fewer people are selling, at least of substance that can kind of buoy this market. Mark, this is exactly what you were talking about when we opened up the show. And I figured I'd give you the layup here that's
why I'm wearing the whale socks, right? It's absolutely why I'm wearing the whale socks. And the sellers now are the people that bought at the top, and they're mostly exhausted at this point. But the buyers increasingly are this relentless, indexed kind of buyers, right? MicroStrategy is just going to keep buying. Metaplan is just going to keep buying. IBIT is just going to keep buying as long as people keep buying IBIT. And so, look, there's going to be shenanigans in IBIT around going short Bitcoin futures and long IBIT, right? And they're going to capture that arbitrage. That's going to happen. And so that's going to keep some volatility in the price. But the idea, like if MicroStrategy is put in the S&P, which, my guess is they won't allow it this time, but maybe they will. But if it does, the relentless buying that has to happen, right, just because it's passive and you don't get to think, will increase this this tightening of the range here, which is the long-term buyers and accumulators, the people that do what the sign says, just buy it, but don't buy it all at once. Buy it today, buy it tomorrow, buy it next week, buy it next month, buy it 2 months from now. That's going to continue. And I had a really cool conversation this morning with the guy, CEO of a company who's trying to build he described it as a system for every man, every woman in America, not someone who understands the technology, not someone who, can explain how it works, but who just knows that they need something to store value in the same way they would use a savings account or a safety deposit box. And the analogy he used, which was great, he said he asked people all the time, so how did your parents protect their valuables? I'm like, well, they put them in a safety deposit box at the bank and they gave me the key. Okay. So what happens if the bank burns down? Well, that wouldn't happen. So, well, that's not what I asked. What happens if the bank burns down? He said, oh, that would be bad. Like, yeah. So we can obviate the need to put those physical analog valuables in a bank vault by putting the digital twin on chain where it's safe and protected through decentralization and proof of work. And he's like, they kind of get that. They don't really understand what proof of work means. They don't really understand what decentralization means, but they kind of understand it can't burn down. Where the bank can burn down, it doesn't happen very often, but it can. And it's the same reason that most of us don't keep all our cash in our house, right? Nobody puts it all in one bank. You spread it out because diversification is a good thing. And on-chain is just a better mousetrap. So we're gonna move in that direction. But with that, X, have a great weekend. Big weekend for sports lovers. The greatest rivalry in sport.
Absolutely.
Duke UNC on Saturday night. And it's going to be crazy. It's going to be loud. And then, of course, the greatest show on earth, the Super Bowl on Sunday. So,
absolutely. And of course, Mark, we know that in the Super Bowl, the only real winner are the advertisers. We will be watching with great enthusiasm about what hilarious commercials are in store that will feed our insatiable appetite for real-time advertising in a world where our attention is split across so many different platforms. And of course, I will be sending a copy of this episode to my family, and special shout out to my sister-in-law who recorded my vociferous debate about Bitcoin. Maggie, we love you. Have a great weekend, Mark. And as always, remind our listeners to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.